So tell me who you are and what your job title is.
I'm Sue Noffke. I am Head of UK Equities at Schroders. I manage about 6 billion of assets across different client portfolios, and I am the lead manager for the Schroder Income Growth Fund.
Now, you've come here today to an investor summit to talk about the Schroder Income Growth Fund. So tell me about the fund. Put the fund in context for us.
It's an investment trust. It's just over £200 million of assets. Its aims are twofold: to deliver attractive income for investors that grows ahead of inflation, and to deliver capital gains for investors over time.
Okay, and gives a sense of the portfolio. Tell us a little bit more about the stats of the trust as well.
The trust is invested predominantly in UK equities. I can invest outside of that home market, but I see so many good opportunities, particularly for income in the UK equity market. The trust is built really from about 45 individual companies, so quite a focused, punchy fund. But it has a style neutrality, so it's not hunting in particular corners of the market, it's taking a holistic view. About 3/4 of the stocks held are large companies, so they have an international focus. They're not tied to the domestic economy. About 1/4 of the portfolio is invested in mid-sized and small-sized companies, and they can be attractive from a valuation point of view as well as a growth point of view. They've got more runway ahead of them, more scope. They can be niche and winners in their niches with scope to grow.
So would you say you're dependent on the UK economy and the strength of the UK economy, or less so?
In the small and mid-cap size, absolutely more dependent on the UK economy, but not entirely. I can think of a couple of names that I've got, if I can highlight those. Hollywood Bowl, people would know about it from bowling alleys in the UK, but they've done an acquisition that takes them into Canada. So that's international growth. If I think about Fever Tree, everyone thinks of the nice tonics you put in your gin in the summer, but they have had a tie-up that really expands their opportunity in the United States with cola mixers, which are very big over there. So absolutely not tied to the domestic UK economy, but more embodied within that compared to AstraZeneca, the Asian banks, Prudential, for example, much more international.
Now, let me take you to investment trusts as a form of wrapper. Now, what are the benefits of an investment trust, and what do you enjoy about them as a manager?
I'll talk about the benefits first and then what I enjoy as a manager. There are a number of benefits to running investment trusts. They are a fixed pool of capital, so you know what you're dealing with. There's no distractions of inflows or outflows. The second aspect, which is really important for the trust that I run, which is an income growth focused trust. So producing that income and making sure that it delivers increased dividends to the end investors year over year. We've been doing that for 29 years without fail, and having got the AIC Dividend Hero Badge, I want to continue to do that. So why does an investment trust enable me to have confidence and my investors to have confidence that I'll continue to do that? The investment trust structure gives a real opportunity to retain some income in the good times, to pay it out in the leaner times. I always think about it as mending the roof when the sun is shining for when the storms come through. And we've had periods when storms have come through. We've been able to utilise what's called revenue reserves to be able to top up in-year income to smooth that pattern of income for investors, and they like that. The third element would be gearing. So we can borrow against the assets of the trust to supplement income, give diversity, and to juice those capital returns when we think the market is particularly attractive. So in the past, I've had about 15% gearing 5 years ago, as we were just at the COVID lows. And today it's about 10% because we've seen market gains of about 75%. So I'm still positive on market gains from here, but not quite as table thumping as was the case some 5 years ago. So I've moderated the extent of gearing. Clearly, gearing can help juice returns on the way up, but it can hold returns back if the market goes through a weak point. So that's something to do with risk appetite for investors.
Now, my final question, activism. Activism in two parts, perhaps. Activists in the investment trust sector, but also SAPA in the investment trust sector. Discuss.
Yes, there's been opportunities for activist investors across the market. So we've seen activist investors behind BP, for example. In the investment trust space, SABA Capital has seen an opportunity from wide discounts. That means that the share prices of the trust have disconnected to the downside from the underlying net asset value. And that they've seen as an opportunity to exploit as they've loaded up on particular trusts that they see as particularly vulnerable. That has prompted a number of investment trusts to seek to pull the valuation levers. Trusts have independent board structures who can make decisions on shareholders' behalf. So we've seen increased share buybacks for those companies to buy cheap shares back for cancellation and to hope to underpin the share price closer to net asset value. Our trust has not had SABA on the share register, but we have been more explicit in the value levers behind the investment trust structure and undertaken more share buybacks in the last 12 months than we have hitherto done.
Sue Noffke from Schroders, thank you very much indeed for your support for the Investor Summit. Thank you.
Pleasure.